All right, what is going on, Discord family? And welcome back to another edition of Market Review with me, T. Hobbs. Man, today was rough. Today was rough. I'm not gonna lie. I still ended the day green, which uh, the more I do this, the more I realize like prop firms kind of got us like in a situation where we really only be trying to get to like green or hit this target or hit that target. But ultimately today I was, even though I was green, I was very disappointed in my execution of the day. I'm gonna talk about why as I discuss my market review for the S&P 500, the Nasdaq, and the Dow Jones. So we'll talk about the volatility index. We'll talk about my plan. We'll talk about some things that I missed. We'll talk about the trades that I was taking on the day. It was a lot of them. I didn't get a lot of screenshots. The market was I was just in the wrong direction. And although I was up in a lot of my trades, it's still a bad trade because of the targets that I was looking for. And again, the fact that I was just in the wrong direction, right? So let's go right into it, man. Let's get right into it. Let's peel that Band-Aid off. All right, so first and foremost, we were looking at the daily candle, okay? When I took a look at the daily candle, my thesis was incorrect, right? Like my thought process was, we had this huge rally up here. We gapped down a little bit in Tokyo. I thought that my thesis was correct. It was just wrong in a sense, but I'll explain. So my thesis was that these buyers here were looking to get rewarded, but I wanted to see the market trade down first into about 50%, come back and retest these lows and then go back up. That's exactly what we got. But in the moment where we were, I was looking for price to push back up first and then go down. And that was my mistake, right? So I'm going to talk about that in the 4-hour breakdown, okay? So what was my plan? My plan was simple. The conditions were we're in a bearish retrace of a bullish trend, okay? Again, all of these things that I'm reading in hindsight, or I'm coming back to read, is just reminding myself, like, if we were in a bearish retrace, why are you looking for longs, right? Like, again, we'll get to that. But we were bullish above 48.71.75. We were bearish as long as we stayed below 55.32.25. In the macro, bears were unable to take out Monday's low, right down here, or I think it was back here. Yeah. Monday's low was back here. Okay. They were unable to take out Monday's low, and bulls took complete control in yesterday's PM session. After rallying the markets 13%, markets are retracing. I want to identify areas to participate in the longs. This was my mistake right here, right? As long as the previous day low is intact. Now, that sounds good on the surface, right? But when you really think about what I just said in there, right? And this is just me critiquing myself. When you really think of what I just said, price at the time that I wrote this was probably close to 54.21. And I was saying that I wanted to participate in longs as long as we were above the previous day low. But in order for us to break the previous day low, wouldn't we have to short down to it first? Right? So that was about 435 points or 8% to the downside to the previous day low. So if my thought process was, hey, I want to get long somewhere near the previous day low, then why wouldn't I just short down to that level? And again, things that make complete sense to you when you walk away, your day is done, they don't really make sense to you in the middle of the trading day when you're battling with your ego. Okay. All right, so the PM session range on the day, look to short the high of the range and long the lows of the range. So I was looking to short 55.15.75 through 54.59. I was looking to long 53.48 through 52.80. And again, context matters because, yeah, this was a good trading plan. However, the market was in a downtrend. And again, we're going to go over that when we get to the 15-minute. Our extreme plan never got triggered, but we were looking for buyers to defend the 4-hour demand. Again, that was about 8 or 10% down. So yeah, that was a ways away. And then our bearish plan never got triggered, but there were some clues that I just did not miss. I mean, I just did not pay attention to, or I didn't take them as seriously as I should have. All right. I'm going to talk about some of those clues. And again, I'm going to be just as hard on myself as I am on anybody else, right? That I'm training, that I'm trying to, help guide through this shit. Like, when I F up, I'm the first person to say it, right? I'm the first person. I think that's important as a leader, like to be able to, recognize when you've effed up, right? And then be able to stand on that, right? So the first thing that I missed, right? I'm gonna talk about this, and I hope that maybe this helps somebody that sees this sometime, or maybe the next time you see it, right? So the first thing that I missed, right, was right over here. I'm gonna take you all the way back to the open of Tokyo. The first thing that I didn't take serious was this opening gap right here, right? Once the market opened or gap down inside of the Tokyo session, inside of premium. What do I mean by inside of premium, right? So, I was having a conversation with my buddy Pippi, and we were discussing like, premium and discount, like what is your definition? What's my definition? Blah, 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 right? And one thing that he said that stood out to me is premium and discount, just like time and price, it's fractal, right? So premium and discount is going to be different depending on what time frame you're referring to, right? Daily, weekly, monthly, whatever it is, right? So if I'm looking at the weekly time frame, the reason this is discount or premium, extreme premium for me, is because anything above the weekly fib or the equilibrium of the previous week, I deem as dis or premium. In other words, if there's a price that is trading above last week's price, then it is currently at a premium this week, right? Vice versa, if we're trading massively below last week's price, then we're in a discount, okay? So that's my definition of premium or discount. So when we look at this again, right, we go back to the 5-minute and we go back to that little purple line that says weekly fib right there. That level sits at 54.26, right? And if that level sits at 54.26, right, and this level here, right, is the gap down, then that tells me, yeah, premium, right? Aggressive premium, all right? So all through Tokyo, we consolidated up here, right? And then we brought the market down. As soon as these lows were taken out, if this high here, okay, this high here and this low never get tested, everything beneath them is bearish carry. It's that simple, right? It's that simple. And sometimes when the market gives you, these juky moves back to the upside, we fall for it because we're human, right? And that doesn't make us bad traders either, right? It just means that we're human, and sometimes we're gonna be on the wrong direction. We're gonna be in the wrong direction, and sometimes we get it wrong, right? Sometimes we just make mistakes and we get it wrong. And today was one of those days for me where, and this is something I got to take out of my vocab starting today, right? It starts today, right? The one thing that I didn't want to do was I didn't want to short or long the market and what I deemed to be the middle of the range. Now, I wasn't incorrect in the fact that this was the middle of the range, but the middle of this particular range held some significant things that I should have taken in consideration and made an exception to the rule based off what price it did. Those significant things were the fact that London, right, which normally brings the higher low of the week, right? This was the open up here, right? This was their pre-market. This was 350 price. This was 550 price, right? And you can see every one of those prices tapped into one level: weekly fib, weekly fib, weekly fib, weekly fib. That should have been the exception to the rule, not to mention it would have lined up with our thesis that the fact we're in premium, right? Tokyo brought the high, and now we're working our way down. And this is simply consolidation at a continuation level that I should have been looking to enter the market, right? I even drew this out. I talked to one of the Discord members in the pre-market prep. I talked to them about, hey, be careful going long because we got this area here where I think the market could potentially tap into. Now hear what I'm saying. I knew that this existed. I knew that this was a good area to short, and I didn't take the shorts. Okay. Instead, I didn't take one short in here, not one, right? Because I convinced myself we're gonna get down into my chessboard area, trading down into 950, and I was looking for longs, which, in my opinion, if you're not entering in a trade, this is a good long opportunity, which it was. However, what I was looking for on the longs, right? i.e., I was looking for New York AM. I was looking for true day, all that good stuff. What I was looking for was the incorrect thing, right? It wasn't the fact that I took the trade, right? It's the fact that because the trade followed my pre-market plan, it did everything that I needed it to do, right? Except I didn't put the ball in the basket, right? When you look at this trade that I took, right? I took longs at 53.27. I took longs at 53.32. right? And every one of these trades went in my favor 20, 30 points. Today was not about me executing, because regardless if I was on the right or wrong side, I was executing at the exact level that I was supposed to execute. My problem today was understanding that I was on the wrong side of the market and not taking the trades as scalps, which is what they should have been. Today, I gave back a total, and I went back and I did the math. Today, I gave back a grand total of 68 points. 68. 68 points on 5 micros, right? Between 5 to 7 micros. I gave back, meaning either I took a stop loss on that trade when I was up, 10 or 20 points, or I simply allowed the market to hit me out for like 2 points, which is my equivalent of moving my stop in profit. Now, was the market moving aggressively at the highs? Sure, right? But did I know those were the highs? Yes, right? And I'm making this video as a declaration to myself in the future, right? Because I use market reviews not to just share with you guys what I did and brag about if I made good trades. I use them as my own personal journal. And what I'm trying to do in this particular video is I'm trying to remind myself that I do not have to try to get 100 points or 200 points. I can be completely comfortable locking in 20 points every time the market moves. And today, if I would have done that, I would have netted those 67 points instead of giving them all back to the market. Now, did I end the day green? Sure. I ended the day green. And yeah, that's cool that I was able to fight my way back. But this journey is about the process. And I want my process to be as solid as humanly possible, right? With the idea of knowing that I need to give myself grace, even though sometimes I make mistakes. And today I just made mistakes, and that's okay, right? But let's continue to follow price in the review. But like I said, this was the biggest miss on the day. You see what happened inside of 850. We broke the low. We came back up. We retested the high. That was my entry right there, right? We came back down, right? Broke the low, came back up, retested the high. Another entry was short, right? Valdez, he was killing us. He just kept entering short, and I kept entering long, getting baptized. We break the low, right? We come back down. We come back up. We take the high, or we fail to take the high. We go lower. Go back up, same thing. It was just over and over and over again. And finally, I gave up on them, after I took this W. Then I moved to a combine account. I ended up taking a good long. And this time I thought about it, right? I gave it some real thought. I was like, all right, where would buyers really want to come into the market, right? They would find a deal at 50% of yesterday's spread. So I knew the daily fib was here. I waited on the daily fib to come down. We swept the daily fib, and I got a little bit of a late entry for me, but I got it long at 51.76, 78, somewhere around there. And I put my stop below 51.65. Ended up getting everything that I needed. And this time I actually took profit. I walked the dog. I came back and I took longs again on this side of price, right off 51.96. Stops were below 51.78. And again, I took profit. So I'm trying to work my way through a lot of the dumb stuff I've been doing, which is mainly just, it's not even that I can't get in profit. Like I'm killing the market, just not taking profit. Right. And then on a choppy day like this, when the market is giving 40-point swings, inside it, even when you're in the right direction, right? We're coming back and pulling back on the S&P 500 40 points, right? I mean, look at this drop right here. I mean, the market is gapping down in ways I haven't even seen it do before in regular market hours. This is a 3 o'clock drop right here where the market is dropping down. And, these are just strange situations that are happening. Therefore, I need to be taking profit when the profit is available, right? Based on how I plan on managing the trade. So moving forward, for me, after I'm up about 20 points, I'm going to lock in profit no matter what, right? And then I'm just going to trail the remaining contracts that I have. That's my declaration to myself. Let's move over to the Dow Jones, and we can see pretty much it was the same things, guys. I'm not going to beat a dead horse. Like I said, the market was pretty simple to read unless you were just baptized in the emotional blood of being wrong, which is what I was, right? Like I was just wrong, right? I was wrong in what I was looking for the market to deliver. And, I'm not going to beat myself up too much because I did do some things right? But essentially, the thesis behind the chessboard, hang on a second. My dog is barking. Apologize, real-time things are happening. The thesis behind the chessboard is to short the highs and long the lows, but there needs to be a caveat in this. When we're at major or higher time frame premium, I gotta be able to take this trade inside of the middle or the lower. It doesn't matter where it is. If the context of the market is adjusted, right, I need to adjust my thesis even inside of my chessboard. So this is one thing that I've been trying to work on. It was something that I noticed when I gathered the data last year. Is the days when I lost, it was the days when the market was shifting from premium to discount or discount to premium, right? So just little things that I noted, right? But moving over to the NASDAQ, you guys can see again, I'm not gonna beat it down. We rejected the NWAG at 3 a.m. That was the clear sign on NQ. And then we never got it up on NQ. I mean, this thing was just dropping straight down, right? And then finally hit the daily fib, double bottomed off the daily fib. To be honest, like the NQ was probably the best instrument to trade. It was a lot cleaner. The NASDAQ or the ES and the Dow Jones, they were a little bit more sporadic, but still, I mean, the delivery was different, but the process of the delivery was about the same. So again, I'm very disappointed in my actions today, but at the same time, I'm holding my head up, saying that, hey, I definitely was able to manage the day. So but yeah, the volatility index got going to the upside. We held the weekly fib. We still could see more downside, guys. If the volatility index wants to start clearing this in dog, right? And you can't really see it with the adjustment on, but if you turn off the adjustment, you can see there's an in dog where the market gapped down on Tuesday. Tomorrow's the last day of the week. And if the market wants to start to feel this on PPI day and consumer sentiment, which is even more important, we're going to be going right back down. So just be careful if you're out here screaming all over Twitter that we're going super bullish. I don't know if we will, but I'm just saying that there's still things to worry about in regards to the volatility index. We're still over 30. People are still selling this market. I don't care how many times we get these huge rallies. People are still selling this market pretty aggressively. So those are my thoughts on the market review, ladies and gentlemen. I hope this helped. I know a lot of people were in a lot of pain today. I could feel it inside of the live stream. And if you were taking my trades, I strongly suggest you don't do that, right? It's the reason why I try to build people to be independent traders, because I don't want you taking my trades, because I don't want to be responsible if I'm not seeing the market correctly and I take the entire Discord down with me, right? If I have a bad day, it should be my bad day alone. I don't expect everybody to drown with me, right? I know some people did well, but I know a lot of people weren't doing well because I could just see how empty the live streams are. And that's usually a good sign that people are getting their ass whipped in the market. So that being said, this is the market review. Don't run from your bad days, embrace them, right? Get better and manage risk. This is the market review. My name is T Hobbs, and I'll catch you guys on the next one, man. Peace.